Hello to all traders and welcome to another free live webinar brought to you by myself, David Kinley. And this time around, we're looking at the important calculations in Forex trading. So a lot of traders, investors still ask me to this day on certain novice calculations and calculations that a lot of people do forget as the trading industry and obviously the trading market in general is very fast paced. And we do forget a lot of calculations that go along with it. So going back to basics, seeing what we can learn from looking out for important calculations in Forex trading. So these are the things we'll like to go over in this week's webinar. So margin calculation, equity, free margin, margin level, calculating profit and loss, leverages, pit values, swaps, and pending orders. Now, this is in relation to using different volume sizes and different currencies as well. So I just want to show you quickly my Orbex demo account, and at the moment, I've got just under $1,700 in it. Now, my base currency of my MT4 platform is in dollars. This is very important to note when we are looking at what we are seeing in the Forex market. So because my base currency is in dollars, then my profit and loss will be calculated automatically in dollars, and so will my margin requirements and everything else. Now, I've just been asked a question, if possible, will there be lectures in Arabic so that it'll be more understandable? Yes, we do have Arabic webinars, and this is on Wednesday. You'll be able to see all our webinars being presented if you log on to our blog at orbex.com, and also visit our social media channels on Facebook and Instagram, and this will give you all the upcoming webinars in English and in Arabic as well. So thank you for mentioning that question. And just a quick reminder that all questions, live or not, will be answered accordingly as you request them. So just to let you know that we are not that we are live, and we are happy to answer any questions that you have in mind as we go along. So margin then, kicking off first of all. So we have margin. So margin requirement is based on the volume, leverage, and the instrument being traded. The examples that I'll give are with Forex for this webinar, because it's more common and a lot more easier to understand as well. So with that being said, just give me one moment. Just move that out of the way. So if we trade one lot of euro dollar with a 1 to 500 leverage, so this is the calculation that we use. So the price is approximately 112.86 at the time that I was doing this webinar. It's a little bit different now. Times the volume. Now, it's important to note that with one lot, it means 100,000 of notional value in units, and then we divide it by the leverage. A micro and mini lot we'll get into shortly, but I'm just giving the example now of a one lot trade. So it'll be the notional value, which is the price of the trade, times 100,000 and divided by 500, which will be 225.72. And again, this is in dollars, for clarification. Trading with a smaller lot size means that the margin requirement will be a lot smaller. So like I said, we've got one lot is 100,000. So a 0.10 lot is 10,000 notional value. So we've got the price times 10,000 divided by 500. And as you can see here, it's less. So if we go for a micro lot, let's do that live. Let's go to our MT4 platform. So I'm going to open a 0.01 trade. So as you can see here, let's get the calculator out just to show you a live trade now. So we've got the value of the price, that's 1.0931, which you can see here. Then we multiply it by 1,000, because 1,000 is the notional value of a 0.01 lot micro trade. And then we simply divide that by 500. So as you can see here, 2.19 and then 2.19. So it's very important to understand that based on the volume size is how we're going to see what the margin requirement is. And my demo account for Orbex is fixed at 500. So this leverage size will determine, again, along with the instrument that I'm trading and the price, on what we are looking at and what we're trading on. So we can do this for a few other pairs. Let's say, for example, we can do something without the dollar in. Let's say euro pound, for example. Again, we can do it slightly higher. Let's go 0.50. We'll close the euro dollar trade, so it's a little bit easier to see. So now we've got 0.84274, and then we're going to multiply that by 50,000. And why 50,000? Because I've opened a micro lot at 0.50 and the notional value is 50,000. Then I'm going to divide that by 500. Now what we've got here, we've got a little bit of a difference of 84.27 to 109. Now what we need to understand is that this is actually in pounds, because my euro pound trade is quoted in pounds. And now because my base currency of the MT4 platform is in dollars, we just have to see what the pound dollar rate is, because that's what we're going to convert. So the pound dollar rate is 1.30 approximately. So we simply multiply that by 130. And there we've got 1.0974, 1.0955. Obviously I didn't round it up to the last pip. However, you get the general idea that based on the Forex pair being traded and based on your currency of the MT4 platform, of your demo or live account, that's what will need to be converted. So euro pound, the 0.84 that I had was in pounds or pence, and then I just converted by the pound dollar rate. And this could be done for multiple of trades. If you, let's say euro Aussie, so whatever the quote currency is, whatever the quote currency is here is what is going to determine what we're going to convert it with. I'll open a smaller lot size just so that I'm not losing too much money on the examples that I'm giving, and my demo account won't go down too far. So again, we've got 1.52377. And we're going to multiply that by 10,000 because I've got a 0.1 trade open, divide 500, and I've got 30.47. Now, because I have a Aussie dollar trade open, and my base currency is American dollar, I'm going to look at the Aussie dollar rate, so 0.72. So simply multiply 0.72, and there we have 221.94. And obviously, if I had added the extra digits in, then I would have actually got the correct 21.95. This would be a little bit higher. So you get the general idea when you're opening margins. So when you're opening trades, your margin level will go higher or lower depending on the volume size you want to take out, the leverage that we have on the account, and the Forex pair that we are trading on as well. So the easiest calculation is if your base currency is dollar, then the Forex pairs ending in dollar, like pound dollar, euro dollar, Aussie dollar. Let's just open a pound dollar trade. Let's go a little bit higher, 0.90. And let's close our other trade that we had open. So again, 1.325. We won't have to do any converting now because this currency is the same as our base currency. So if we go 1.30253, multiplied by 90,000, again, 90,000 represents my notional value of 0.90, and divide by 500, it's 234.455, and it's been rounded up to 456. So that's actually an exact amount of what the margin will be. And this is because the base currency is the same as the quote currency of the Forex pair that I'm trading on. So that's the margin calculation pretty much done. But as I said, it's very important. If you have a demo account, just play around with some trades, understand how the margin is requested and is calculated, because you don't, when you're opening more than one trade, we'll open some smaller ones here. When you do have many open, then this can get a little bit out of control. So it's important to know that for every trade you're opening, we know where we stand with the margin requirement. And obviously you can work this out individually and then add this up if needed. This is only if maybe your margin requirement is a little bit out of control and it's affecting your margin level, which we'll look at shortly, because this is a very, very important tool when we are looking at the overall trades on account as well. So let's go back to the presentation quickly. So as I said, this is just a standard euro dollar one lot with a 1 to 500 trade that I've given the example with, but the other examples MT4 platform were a little bit more in depth. So I hope you got it. And as I said, any questions, please feel free to ask me on the chat. And actually we have another question just come up now. And it is, just confirming. So the volume, Forex pair, and the leverage is all taken into account with the margin requirement. Yes, that is correct. So these three things are three big factors into what you are trading on. So let me just go back quickly while we've got some time. So for example, if the pound dollar rate went from 130, let's just take a look at the chart, went from 130 to where it has been before. So at the height of the pandemic, we went right down to 114. So naturally, the calculation of the margin requirement would be less, because it would be 1.16 times your volume divided by the leverage instead of 1.30 as well. So this is what you can see. So I've got another question here. Where can I see my leverage amount? So the best place to go is if you go to view and sorry, I pressed the wrong thing there. If you go to view and on your navigator, I'll just make this a bit more. So these are my Orbex demo accounts. So if you just hover over the account here, as you can see your leverage. So as it says there, it says my name, David, it says Orbex Global Limited, and then demo, and then it's got me the amount of my balance, and then it's got the 1 to 500 leverage. You just hover over your account, and then it will just give you the leverage there. That's the best way to see it. So I'll just type that answer just in case anyone missed it. So on your navigator, hover the mouse over your account and the leverage will be visible. So again, keep the questions coming if you have any. So yeah, your navigator can be found at view, navigator. As you can see, I just closed it because I had it open already. Make sure that you have, you can see the whole thing. And as you can see, those are my test accounts with Orbex as well. But you just hover over and 1 to 500 will be visible. If you don't have access to your NT4 platform, then if you come on chat to our support team, they will tell you your leverage as well. So moving on to the next slide. Now we're going to look at equity. So what is equity? So equity equates to your real life funds in your trading account. And basically it's your balance plus or minus your open profit and loss. So it's very important with your equity because it acts as what you have left in your account after your trades have been opened. So currently I have a balance of 1,066.78. If I minus this 36.61, then that will leave my equity. So it's basically your balance and then plus or minus whatever your profit and loss is. And this will give you your equity. So if I was winning this trade that I opened for pound, dollar, I'll be $40 in the plus, and then my equity would be 1,668.78 plus $40. So I'll be actually in a winning position there. So that's simply what your equity is. And we'll have a look at the rest of these calculations now because they all factor an importance when making a trade and making your decisions. So let's just have a quick look again. So free margin. So the calculation is equity minus the margin, and that equals the free margin. So this is the amount available open to open more trades. If there's not enough funds in the account to open more trades, then the message not enough money will appear. So let's try that now. So I've got equity of 1613, and I'm going to open a big lot amount. Let's just go 50 lots just to show you that I won't have enough money. And that's the message you will get. And why don't I have enough money? Well, if I'm going to open 50 lots, that equals to a big notional value of over 5 million. So if we put in my current equity, so if we go to 1.30, for example, for the pound dollar, and then multiply by that, so that's one lot. So that's 5 lots, and that will be 50 lots. And then divide that by 500. So I need $13,000 to open 50 lots of pound dollar, and that's why it's given me not enough money. Even if I wanted to open 10 lots, I wouldn't have enough because I've only got, well, an equity of 1,594. Just being, it's important to note that it's what your equity is saying to you, not the balance at this position, at this moment in time, because I've got open trades at the moment. And unfortunately, my pound dollar trade is not going in favor of my example. So thankfully, this is just a demo account, but we can keep an eye on it in the presentation. So unfortunately, the time that I opened it and a buy, we've started sinking, and hopefully there'll be some support here and a push higher, but we'll look on support and resistance levels in another webinar as we go on. So that's the basic for free margin and margin level as well. This is very important because once your margin level gets to these levels here at 100% and 20%, then things start going a little bit into the red territory. So once you have margin called, when your account balance, so your margin level gets to 100%, then you'll get a red line and a flash alert on your MT4 platform. So let's just have a quick look at that. So at the moment, we've got, let's just double check it. So we've got an equity of 1584. This is just approximately because the market is moving a little bit. So 15, it's moving upwards now. So 1584 divided by the margin, which is 256. And then we are times it by 100 to get a percentage. So as I said, the market is moving. So it's approximately 618. It's on 621 now. When this drops to 100%, then this gray line here will flash red to indicate you are on margin call. Now, what this does for the MT4 platform is to give you a warning that you are close to being stopped out. And what stop out means is when the margin level goes to 20%, the trade with the highest deficit, the highest loss, will be closed automatically first by the platform to protect your risk capital, to protect your balance. So for example, the example that I've got now, if my margin level went to 20%, then my pound dollar trade will be closed automatically first because it's the one with the most loss in it. So 80 something dollars there. So that's how you calculate your margin level then. So it's equity divided by the margin, and then simply multiply by 100 to give a percentage. So every time we need a percentage, so it has to be multiplied by 100. So once this is done, we can see clearly I'm on 621. I can still open trades, but at the moment I'd rather not because my margin level is getting closer to 100%, and it's not something that I want to risk. So this is something else just to take into account as we go along on the webinar. So that's the basic calculations of the balance, the equity, margin, free margin, and margin level as well. So the next thing I want to take you through is the pips and points. Now, pips and points are very, very important depending on what currency pair you are trading on. So a pip is quoted as the 4th digit and the point is quoted as the 5th digit in most Forex pairs. It's quoted as the 2nd and 3rd digits in yen pairs. So here's just a quick example here. So simple euro dollar Forex pair. So you have 1.12259. So, and the dollar yen is 115.231. So for most Forex pairs, it's the 4th digit highlighted in red here. And for yen pairs, it's the 2nd digit after the decimal point. And the points are the 5th digit, or with the yen pairs, it's the 3rd digit. So what we have here, for example, is 59 points or 5.9 pips. And for the yen pairs here, as the example, we have 31 points or 3.1 pips. And I just want to take you quickly back to the MT4 platform just to see. We'll just close the navigator bar just for now, just so we can see all the Forex pairs. So dollar Swiss franc, 0.93693. So the 9 is the pip and the 6 that's just moved is the point. So 9.6 or 9.5 pips there. Pound dollar, 1.30186. So again, the 8 and the 6, this is the pip and the point value. So we've got 86 points there, or 8.5, 8.6 pips. So this is the whole concept. And you get the general idea for the rest of the Forex pairs. Obviously, I won't take you through every single one because we don't have that much time, but you get the general idea. Euro dollar, the most traded Forex pair in the world, 1.09711. So this is 11 points or 1.1 pips. So this is the basis of calculating profit and loss as well, which we'll look on shortly. So pip values are here, and this is per one lot. So it's good to understand that anything quoted in dollars is $10 a pip per one lot. So euro dollar, pound dollar, Australian dollar versus American dollar, Kiwi, which is the New Zealand dollar versus the American dollar. The pip value is always $10. And there's other calculations for the rest of these currencies as well. So if we're trading dollar Swiss, so the Swiss currency is the quote, then the calculation is 10 divided by the dollar Swiss rate. The yen is 1,000 divided by the dollar yen rate. And you get the general idea for the rest of the currencies. So this is why trading pip values can change quite dramatically or change quite unexpectedly, because we are relying on a calculation for the rest of these currencies. For the dollar quote currency, it's $10 a pip no matter what. Nothing will change on this aspect. It's going to be $10 a pip for euro dollar, pound dollar, etc. For, let's say, euro against the Canadian dollar, it's going to be 10 divided by the dollar Canadian rate. And as you can see here, if we look on the dollar Canadian pair, it's moving constantly, and the same with dollar yen. So this is why the calculations, which we'll see shortly when we're calculating profit and loss, can change quite dramatically as well. So this is something to take into account when we're looking at profit and loss calculations. So I've just been asked a question, are these fixed rates all the time? So yes, these calculations are fixed, and I'll give you some examples shortly when calculating profit and loss. And all these pip values can be found on our website at orbex.com, and it will give you an insight into how pip values are calculated as well. But I just wanted to take you through more of a direct understanding. So let's just check. Simple calculation on P&L. So based on the based on the instrument traded, volume and pip value. So we've got a simple example here for euro dollar, and that's $10 a pip. And just remember, this is per one lot. So if we go to micro lots or mini lots, then it will be, micro lot will be $1 and a mini lot will be less than that. So I've given an example of a 2-lot trade here. So we've had a 5.3 pip profit on a 2-lot trade. So what we're going to do, we're going to take those 5.3 pips, times it by $10, and then times it by 2. So that's $106 profit. And let's just see a quick live, because I think I've got a pound dollar. Okay, so this is $10 a lot for this pound dollar trade. So what I'll do, I'll just freeze it, because it's a lot easier to see. So the market's not moving as quickly. So what we've got here, we've got a buy position, and we're in a minus. So already I know that my open price of the trade is going to be lower than the current price, because I've bought the currency, I bought the pound dollar trade and I'm in a minus. So that's something to clear up first of all. So I know that I'm in a loss here. So 1.3025, which is the open price. And then I'm going to minus by 1.30818, sorry. And this is the current price. So 0.0007. So as I said, the fourth digit is the pip value. So with that being said, let's just do that calculation again, just to make sure I've got it correct. 3253 minus 1.30183. So 70 pips, 70 points, sorry. Then I'm going to multiply that by the volume. And then there you go, 63. I don't have to do any other calculation because the for pound dollar, the pip value per lot is 10. Excuse me. So let's go to the other example there. So we've got dollar yen, for example. So 118.08 and then minus 118.029. So again, because I'm in a buy position, I know that this is higher than this because I'm in a profit at the moment. So what we've got here, we've got, as I said, with the yen pairs, it's the second digit after the decimal points. This is 2.1 pips. So that's my profit at the moment. So 2.1 pips, and we are going to multiply that by the volume. So times 0.1. So 0.21, and then we're going to multiply that by the pip value. Now, what is the calculation for pip value for dollar yen? Let's just go back on. So it's 1,000 divided by the dollar yen rate. So currently the dollar yen rate is 118.026. So 1,000 divided by that is going to be approximately 8.8, but let's just check it now. So just remember this 0.21. So 1,000 divided by 118.03, 8.47. So 8.47 multiplied by 2.1, and then we have to multiply that by 0.1 for the volume. And approximately it's going to give me the amount. So 1.95, 1.77. This is because I didn't do it the exact pip value, but you get the general idea. So if we go back to the presentation, I've given an example for dollar yen at the moment. So if we get that 5.3 pip amount times approximately the pip value, which is 1,000 divided by the dollar yen rate, I've given here a example of $8.8 approximately times by 2 lots, and this is the amount that I'm going to be given. So let's just do some quick calculations on the pip values so we know where we stand. So for Swiss, we've got 10 divided by the dollar Swiss rate. So let's go back to our trusty MT4 platform. So 10 divided by 0.93717, 0.93717, sorry. So the pip value for dollar Swiss at the moment is approximately 10.68. The reason 10.67. The reason why I'm saying approximately is because these prices are constantly moving. As you can see here, dollar yen, this was 1,000 divided by the dollar yen rate, 118.025, so approximately 8.4. And we'll just do one more just to give you the general idea. Pound as well. So let's just take a quick look. Pound pairs, 10 times the pound dollar rate. So I'll get our trusty calculator out again. So 10 times 1.30165. That's the current pound dollar rate. So you're looking at about $13 there. So you can get a general idea that the pound dollar pip value, or the pound pip value is a lot stronger. It's at $13 a pip per one lot than it is the standard dollar quote currencies, because this is $10. Swiss was approximately just over $10. But as you can see here, the pound pairs are $13. So this is something else to take into consideration when you are trading and when you are looking for making possibly some more capital on there as well. And just a slight, let's just take another look at an example then. So we've got here as well for the dollar Swiss, so 0.93699 minus the current price 0.93713. So here we've got the digit, decimal point, and then 1, 2, 3, 4. So this is the pip, and then this is the point. So 1.4 pips there. So 1.4 pips multiplied by the volume, 0.014, and then we need to multiply that by the pip value, which was approximately just over $10. So that's why we've got 0.03, 0.14. If we just do that again for the dollar Swiss, so the dollar Swiss was 10 divided by the dollar Swiss rate. 10 divided by 0.93690, 10.67. So this is just something to take into account, as I said, when you're looking at the next way to do on that as well. So I've just got another question. Do you sometimes organize live trading? We can do. The webinars are basically helping our traders and clients to get more comfortable with live trading. Obviously, a demonstration account or a demo account, as it's more commonly referred to, is the first step in getting a little bit more comfortable. And obviously, the more trades you open at smaller amounts, don't go too crazy like I did with the 0.90, because it could go in the wrong favor for a demonstration. But this is what we do to help our clients. So we don't actually do live trading ourselves. However, we do these webinars to get our traders a little bit more comfortable. We do have also the NFP live webinar, which does do focus on live trading the NFP. So the NFP is the non-farm payrolls, and that happens on the first Friday of every month. And the webinar is at 3 p.m. GMT +3. What we need to just let you know is there's not actually live trading that is done. There's just the basics of looking at the NFP and what the opportunities bring. So I'll just reply. Okay. So please join us for the live NFP every first Friday. So I believe the next NFP is on the 1st of April, and that will be hosted by myself and a special guest speaker just to take us through what the possibilities are in that respect. So there's just a little trick that I want to show you for the exact pip value. So what we do to get the exact pip value at the time is we take the amount of P&L of the trade. So I've just given an example here of 98.08 for a dollar yen trade. We divided that by 5.3 pips that we were making, and that equals to 18.50. And then we divide by the lot size that you've taken out. So the exact pip value can be seen, which was $9.25. So if we go back to our MT4 platform, and we'll see, we can see with this example actually. So we'll take the I'll do it on the dollar Swiss franc trade. So 0.14, and then we divided that by 2.1, which I believe was the pip value that we had for the dollar Swiss trade. And then we multiply that. So we divide that by 0.01. I guess it wasn't 2.1 because it would have been a different amount. Let's just double check it now. 0.93699 minus 0.93686. So it's 1.3 pips. So 0.14 divided by 1.3 pips. And then that gives us that amount. And then divide by 0.01. So as you can see here, the exact pip value that I took the trade out for the dollar Swiss, that was the amount, so 10.76. So this is just like a helpful tool so that you know the exact pip value of what the dollar Swiss was when we opened the trade. Let's do it for dollar yen to make it a bit more clear. So 1.78, because that's my P&L. Actually, we need to know what the pip value is. Sorry, 1 second. So 118.008 minus 118.029. So this was 2.1 pips. Okay, I was close. Got it on the wrong thing, wrong trade. So we get 1.78, and then we divide that by 2.1, and then we divide again by the volume amount. So the exact pip amount for the dollar yen trade that I did was 8.47 pips. So at the moment I opened the trade, it was 8.47. And let's just see how close that was. So the current amount of the dollar yen pair is that. And so it's 1,000 divided by that. 1 second. 1,000 divided by 118.062. So 8.47. So you can just double check it there that we were very close on the amount in that respect. So as I said, any questions, please feel free to give me any questions, and we have another one now. What's the exact value for 100 lot, 50 lot, and 25 lot size? Well, it depends on the value. Obviously, the maximum allowance on volume sizes is 60, so we can't go over that. But if you want to do 50 lot, it depends what the exact value is. The notional value for 1 lot equals 100,000 units, we could say. And then if we go on to 5 lots, just to keep it simple, it's 500,000. And then that would mean 25 lots would equal to 2.5 million. And then 50 lots would be 5 million. So just keeping that into account as well. So 25 lots is a good example. However, because of my current balance, current equity of the account, it won't actually be able to open an account, but open a trade. But if we go on to 25 lots, so for a pound dollar trade, 130, 2253, and we multiply that by 2.5 million, which is 25 lots notional value, divide by 500. That's how much funds or equity I would need to open 25 lots of pound dollar. So just keep that in mind. If you are looking to open more than 10 lots, 20 lots, or even up to 60 lots, the amount gets higher and higher. So just keep that in as we could as well. So moving on with the presentation, and as I said, anything you want me to go back on or explain a little bit more, just let me know and we'll go into it. So leverage calculation. So lowering the leverage. This is important because increasing a leverage will not really affect your open trades, as your margin level will not be lowered. However, decreasing leverage will have an impact on open trades and could also change your approach to future trades. So basically, the way that we do this, if you want to lower your leverage when you have open trades, the calculation will be your old leverage divided by the new leverage. So example, if we want to go from 500 to 100 leverage, this is 5 times lower. So as you can see here, we have the trusty calculator again. So 500 divided by 100, which would mean 5 times lower. And then what we need to do then is divide the current margin level by 5, and this will give you a new updated margin level. So if I, for any reason, wanted to lower my leverage from 1 to 500 to 1 to 100, it would mean that my 622 margin level percentage divide 5 would drop to 124. Now, it's very close to margin call, which is 100%. So I probably wouldn't want to do that in this move. But strategies of lowering and making leverages increasing, so increasing leverages is a strategy for the trader if they feel that they want more margin level or they want less margin level for whatever trading strategy they have. Then just make sure that if you do have open trades, it can be a little bit risky if you are close to margin level. if I wanted to go from 500 to 300, it's 1.66 times lower. So then I would get 626, which is my current margin level, divide by 1.66, and this will give me 377. You can see it's a little bit less precarious, a little bit less risky, 377 if I wanted to lower my margin level as well. So this will give you a little bit less to play around with. So I hope that clears up what we're doing when we are lowering leverages as well. Now, moving on to swaps. So what is a swap? I've just got another live question. I can see that this video is recorded. Can I get the recording after the webinar? Unfortunately, the recording is only going out on live Zoom. You can actually log on to our YouTube channel at orbex.com if you go onto YouTube, and it will be recorded there. So this is the place to go. And obviously leave your comments, any comments or queries that you would like me to answer, please feel free. So I'll just reply back now. So our YouTube channel. So my previous videos, we've had some questions later on that our traders, our potential traders of Orbex would like to know, and we've been able to answer them a little bit more later in the process. So please feel free at any time to give me any questions that you might have on your mind. So swaps, what are swaps? Swaps are basically charges for trades that are left open overnight. And swaps, most importantly, are only applied to active market orders, not pending orders. Pending orders is what we're going to see shortly, but this is just something important to note, that if you have a pending order, it cannot be charged swap, no matter how long it's been on the market for. So the calculation, this is per one lot, is the pip value per one lot of the Forex pair multiplied by the volume of trade, multiplied by the pip long and short, this is on the specification which I'll show you shortly, and times the number of days. So if we go back to our MT4 platform, you go on to right click on any pair, specification, let's just open that up a little bit more, and the swap values are here. So swap long minus 0.576 and swap short is minus 2.74. Bearing in mind this is in points, so the actual pip amount would be 0.05 and 0.27. And just bear in mind that it's important to note that some swaps can be actually in a positive. I've just got another live question. So what's the best leverage for a low account size? So the higher the leverage that you choose will give you more room to open a trade. So let's just take, for example, what we have here. So we've got a margin now. I can just close these trades because, as I say, it's a demo account and we don't mind too much that we're losing. So if I open euro dollar, let's open one lot. Let's go for it. So at the moment, we've got 1.09657 multiplied by this 100,000 notional value and divided by 500. So that's 219. As you can see here, 21931. If I didn't have the 1 to 500 leverage and I had a 1 to 100 leverage, let's just see what the difference would be. So multiply 100,000 divided by 100. So I'd need $1,096 to open a one lot position on euro dollar. So leverage is a double-edged sword. I'm sure you've probably heard that before. The higher the leverage, the higher the risk. If you have a high leverage of 500 or up to 1 to 1,000, you can open bigger lot sizes with less margin. However, if the market turns against you suddenly, then this could actually wipe out a lot of your margin level. So it's important to note that try and balance your volume sizes as well as your leverages as well. If you do have a high leverage, like I do on my demo account of 1 to 500, probably a one lot trade is a little bit high. It's probably better to go for smaller volume sizes, and this could obviously free up your account to open different trades and smaller as well. So the answer to the question for what's the best leverage for a low account size, I'll just put it depends on the volume and Forex pair traded, as all three can depend on what you trade. So with that being said, as I said, I don't want to give a definite, there is no definitive answer what's good for business, what's the best leverage. The best leverage is what you feel comfortable with. And as I said, for me, opening this one lot position for euro dollar is a little bit high, as I said, because I've got a 500 leverage, and the margin calculation means that I need a bit less margin. However, in doing so, I'm not leaving much open to open other trades. So perhaps I should have opened a 0.50 trade, and that would have given me less margin and a bit more of my margin level to play around with for other trades. So as I said, it doesn't really matter. It's a personal choice for the trader on what they want to do. As I said, keep the questions coming. Always happy to answer at any point. So as I said before, these are the swap calculations. Unfortunately, I don't have any live swaps to show you because this is my demo account and I didn't have any swaps open overnight. But if you go into the Forex specifications for all of these, you'll find the long and short. And as I said before, it can have positive swaps. Not all swaps are negative. This is actually zero. So you won't actually have any swap charge if you were to take out a buy position for New Zealand dollar against Swiss franc. So just have a little look. If you're deciding to leave trades open overnight, this can actually lead to a possible charge or possible profit, depending on what is happening in that result as well. So what I wanted to show you now is just quickly on our website as well, just put it onto the big screen. So if you go onto our website at orbex.com, go to trading and go to Forex, scroll down and you'll see all the FX pairs displayed on our website. If you go right to the bottom, it'll give you the latest swap updates. And this is for all of our instruments that we offer, stocks, commodities, and Forex pairs, amongst a few of the asset classes. So for Aussie dollar, for example, for short, it's minus 1.3, and for long, it's minus 1.1. But as I said, not all of the instruments that we offer have a minus on them. For Euro, Norwegian Krona, 5.168 plus. So just have a look at what is available on our website, and also the MT4 specifications if you don't have time to access the website and you've just got the MT4 platform as well available. So as we move on to the last topics of the webinar for this week, we're looking at pending orders and market orders. So there's two types of orders, pending and market. What is a pending order and what's a market order? Well, a market order is an instant order in the market. When you open the trade, the market order is basically at the next best available price in the market. So when I opened my euro dollar trade, the best price, the instant price was 1.09657. And if we go onto the chart, I'll just move that along. Let's get rid of these lines so it's a little bit easier to see. So I'll just zoom in. So as you can see the line here. It's 1.09657 is where my trade opened. So that's a market order. And a pending order are categorized into 4 different parts. So we've got the stops and the limits. So we've got a buy stop and a sell stop, and a buy limit and a sell limit. Now, what are the differences between them? Well, let's take a quick look on the example diagram that I've given here. So a buy stop. So the order is placed above the price line and it's expected to keep going. So if you put a buy stop pending order in, you're expecting the price to start here. The pending order is the green line where you expect the order to hit. The price will be the order will be activated, and then the price will keep on going higher. Opposite with the sell stop, you expect that the price will start moving lower. It will hit the desired pending order price and keep going lower. So I've got another question. Why are so many traders losing? Well, it depends on the type of trades that they're placing. And, you know, a lot of traders do have winning positions. It's not like every trader loses. A lot of traders do have some good trades open, and Forex trading and CFD trading in general can be very, very profitable with the right amount of time and patience and investigating into what's looking likely to go up and down. So I'll just give a quick answer to that. It depends on each trader. So let's just take a quick look at how it can be profitable. So let's just take a look on gold. Gold can be a vast safe haven for a lot of traders. And what I just want to emphasize here, if we go on the daily chart, gold is very driven on political events in the world and also on uncertainty. And what we've got here for the gold is we've seen record highs, and just this due to the Ukraine and Russia conflict. So a lot of traders knew that when this conflict really started getting out of hand, a lot of traders went to this safe haven gold. And as you can see here, prices started spiking higher and higher. If we go to the height of the pandemic as well, as you can see here, when the pandemic started, in March 2020, look at the vast ascension we saw, and this is because traders were flocking to gold because of big political events, and big events in the world does drive gold. So this is something to look out for. So the question is, why do a lot of traders lose? It's, you know, if you're trading gold in this particular period, then it could be very, very beneficial and profitable, because as you can see here, gold did start spiking when there are uncertainties in the market around the world. So just something to look out for as well. However, back to pending orders. So we've covered the stops. So the stops are basically where we believe the line will penetrate and keep on going to the upside or downside. A limit, on the other hand, is looking at the other end of it. Just answering back to a question quickly. So a limit is the other way. So a buy limit is placed below the price line. And what we're expecting to happen is that the price line will start moving lower. It will hit a support below the price line and then start moving higher. So the order will be activated when it hits this price line, and it will move higher. Opposite with the sell limit, the order is placed above the price line and is expected to bounce and retrace. So a buy to sell limit can be a little bit confusing because the buy limit is placed below the bid line and the sell limit is placed above the bid line. So let's see that in action then. So for a buy stop, just go back to pound dollar, let's say. So for a buy stop or a sell stop, let's do a sell stop because it's a little bit easier at the moment, a little bit because the market is moving lower. So I believe that the price will keep on going lower. It's going to hit my pending order price of 1.2996 and then activate and keep moving lower. So this is the whole point of a sell stop. Buy stop, on the other hand, is the opposite way. I believe the market will go to 1.3061. My buy stop will be activated and the market will keep on pushing higher. So this is the whole purpose of stops. with pending orders. And I'll show you that in a live example. So we've got euro dollar, sorry, no, pound dollar. So where we go, we open the order box, we go from market execution to pending order. And then this is the choice of pending orders that I have: buy limit, sell limit, buy stop, sell stop. So I want to do a buy stop first of all, and I believe it's going to go at 1.3061 and then place. So now I'll just move this out of the way. So I just moved it slightly there. So 1.3063. So I believe that the market will start moving higher. This is when I can't be on the market watch the whole time. I might have my MT4 platform closed. I might have to go out somewhere. I won't have access to my MT4 platform or the application on my phone. And I'm guessing that the market will move higher. So in doing so, the order will activate here, and then the price will keep going higher. And I can probably maybe put a take profit in about here to close any profits, because that's what I believe is going to happen in the market. And conversely with the sell stop, I'll just take this line out of the way. So 1.2996, that's what I think is going to happen with the sell stop. So again, 1.2996. And that's approximately where I think the market will go. We'll start moving lower. My pending order will be activated. It's here. And then the price will start moving lower. The important thing to keep in mind is we cannot, due to the bid and ask price, we cannot put a pending order too close to the market price. And what does that mean? So the market price is coming at 130.17. If I wanted to do 1.30, oh, it's let me do it, but let's go a little bit closer to the market then. Here it says open price you set must differ from the market price by at least 5 points. So just bear that in mind. If you do get an invalid take profit, sell stop price. So let's put it very close to the market, 1.315. So that's less than 5 points. And that's even let me open it. So it's probably not the best example. Let me just do that again, just to give you an example of what we're doing, what we're seeing. So 1.30166. As you can see, because it's very, very close to the market price, it's giving me invalid stop loss or take profit. So if you get that, it means that you're very close to the price, or you're doing it the wrong way around, which I'll show you in a second. I just want to point out that because my pending order is very close to being hit, my box here has flashed green. Your box here flashes green, you know that the pending order is roughly about to be activated. So I've just got another question. Are you placing sell stops close to support resistance? Yes, you could say that. I mean, at the moment, if you can actually drag this down on your MT4 platform and move it, you can see a little bit of support here. I'll just delete these other ones, so it's a little bit easier to see, so it's not too congested on the chart. So you can see some support levels here that you think, okay, if it hits this amount, it hits this level, I think it's going to keep going lower. So yes, you correct, you can use that. And yes, it is good to trade news with as well, to trade high impact fundamental news events. You can use pending orders because they can be very, very beneficial if you're not at your screen, or you cannot get to a pending order at the time. So just a quick look at limits as well whilst we close the presentation. So limits, on the other hand, are placed in the opposite way. So I believe, let's just move that away. I believe that the market will hit this price here and then start moving lower, and that will be a sell limit. So pending order, sell limit, so 1.3067. And I believe that the market will move here. I think I did that the right one. Sorry. Let's try that again. I did 1.36, so there's a small typo there. So 1.3069. So the sell limit is placed above the bid line and a buy limit is placed at the other side as well. Just got another live question. Yeah, good, thank you. You are welcome. As I said, any questions, just please keep on coming, because it can get a little bit confusing sometimes with the limits. So a sell limit is placed above the bid line and a buy limit is placed below. So at no time can I place a buy limit above the bid line. So 130.18. So I couldn't place it at here, 1.3069. I cannot place, because a buy limit is supposed to be placed below the bid line. So as I said, if you get this message, invalid stop loss or take profit, it's because you're too close to the market line, which is 130.18, or you're placing it in the wrong direction. So I just got another question. Can you set stop losses to the original order manually? Yes. I mean, if you've got an open order like I have here, you can go to modify order, and then here you have the stop loss and take profit. So that's how you can do that manually as well if it's a live trade. So I hope that helps. So yeah, if you have a live trade open, you can just put a stop loss or take profit on, but just keep in mind that the stop loss or take profit you must set is at least by 5 points. So this is just something else to keep in mind as you go on with your trades as well. So in closing with this webinar, thank you very much for joining me. I'm going to once again, as I said, have this on our website at orbex.com and our YouTube channel as well. And join me for the next webinars as I go through every Monday on the most best topics. And thank you and happy trading. Same to you. Thank you very much. And also I'll be sticking around for roughly 10-20 minutes online. If you have any questions that you'd like to give to me, then feel free to do so. As I said, calculations in trading can sometimes get lost, and we want to always make sure we have a keen eye on the calculations and trades as well. So thank you for your attention once again. And as I said, I'll be online if you have any other questions, and I'll catch you at the next webinar, which is next Monday, where we look at the CFD trading on shares. We have a lot of stocks and shares to trade on, UK stocks such as Tesco, BP. Then we've got European stocks such as Louis Vuitton and Allianz, Lufthansa, etc. And then we've got American shares such as Visa, PayPal, Nike, and to name a few. Lots and lots of shares to look at and how we trade them and the best ways to be profitable as well. So join me next Monday for the next webinar. As I said, I'll stick around for a while. If you've got any questions, please feel free, and I'll catch you at the next webinar. Thank you very much, and bye for now.